Welcome to Illustrate to Educate with Dan Zimmerman. You've come to the right place for simple and objective videos on topics that matter. Have you ever wondered what is wealth tax? A wealth tax is a popular proposal to institute a tax on an individual's net worth. Net worth can be calculated by finding the difference between someone's assets and liabilities. Not sure what an asset is? Let's look at some examples. Assets include things such as cash, savings, investments, house, cars, and any other property. Then in the other column, we have examples of liabilities, which include mortgages, credit card debt, and any other type of bank loan. An individual's net worth is just the difference between these two columns, and a wealth tax would be a tax on this amount. Let's go ahead and take a look at a simple example of how this wealth tax would be calculated. For example, let's say somebody has $600,000 of assets and $200,000 of debt. That person's wealth, or net worth, is $400,000. If there were to be a 2% wealth tax, then that would generate an $8,000 tax bill. How does wealth tax differ from income tax? Think of wealth tax like property tax, which is a tax that is collected every year based on the value of your home. Income tax, on the other hand, is a tax on money or income received over a period of time, typically in return for a person's job or occupation. Common examples of income are paychecks, money from renting out a house or a commercial property, or it could even be dividend payments from a stock you own. If there were to be a wealth tax, how much would I have to pay? The answer is none. You most likely wouldn't have to pay it unless you're super rich. Senators Elizabeth Warren and Bernie Sanders are two proponents of a wealth tax. Sanders' tax would only affect people with wealth over $32 million, and Warren's tax would affect people with $50 million or more. That means in 2019, Sanders' plan would affect around 182,000 people, while Warren's plan would affect 70,000. What problem is wealth tax trying to solve? A wealth tax is an aggressive proposal to try and address the wealth distribution issue in the United States. What does this problem look like? The top 1% of Americans own nearly a third of all household wealth in the United States, while the bottom 50% of Americans hold only 1.9% of wealth today. A wealth tax would raise anywhere from $1 to $5 trillion to help fund programs to help the poor, such as healthcare, education, and food assistance programs. What challenges are facing a wealth tax? First off, some tax experts argue that it would be unconstitutional. Others say it would be difficult for the I.R.S. to have a process for evaluating people's assets, such as artwork and fluctuating values of stock. The I.R.S. doesn't have the resources to handle a wealth tax. The I.R.S.'s workforce has shrunk 16% from 2013 to 2018. Lastly, there's the concern that the wealthy may find loopholes and other ways to avoid paying the tax. With this information, you can now follow the latest on this proposed bill that is one of the many solutions to remedy the wealth inequality in America. Did you find this video helpful? Please hit that subscribe button and subscribe to Illustrate to Educate. And check out some of my other videos by clicking on the videos to the right to see more simple and objective videos on topics that matter.